Hi, everyone. Good morning, good afternoon, good evening, wherever you are around the world. Welcome back to Family and Finance. My name is Rose Joshua. Today, I'm going to wrap things up on our RRSP discussion, which is the Registered Retirement Savings Plan. I've talked about it now for a few sessions. Today, I'm going to wrap it up with three items just to wrap up. The first one is your home buyer's plan. Home buyer's plan. The second one is a lifelong learning plan. And the third one is RRSP loans. Okay. So I'll just briefly explain how these all work. So for those of you who have never bought a home, if you've never bought a home, or if you've not had a home if you've not had your own purchased home, if you've not had a mortgage in the previous 4 years, neither you nor your spouse, then you're qualified to use your RRSP, Registered Retirement Savings Plan, towards the down payment for your home, up to $60,000. Okay. So let's say you have 60,000 or more, your spouse has 60,000 or more, and this is your first home, or you haven't had a primary residence in the last 4 years, then you are qualified to use up to 60,000 each. So together, if you were to max things out, you would use up to 120,000 towards the down payment for your home. And that is not taxable. Okay, so it's tax deferred withdrawal. This is one of the couple of conditions under which you can get your RRSP money, withdraw your RRSP without tax. Okay, but there is a caveat. You do need to pay back the money to yourself, basically replace what you withdrew. They will give you up to 15 years to do that. So, recap, home buyer's plan, first time home buyer's plan, all right, or you haven't had a home in the last 4 years. So there is a form that you use, talk to your mortgage broker, or you can come have a chat with me and I can guide you, okay? To withdraw your RRSP up to $60,000 per person towards down payment for your house. That's a home buyer's plan. That's withdrawing from your RRSP without tax. But again, I'll repeat one time that you will have to repay it within 15 years, within up to 15 years. Depending on the amount, they might give you a shorter time. Now, if you don't replace it within the time frame that CRA gives you, then whatever is the balance remaining from your withdrawal would be taxable at that time at your marginal tax rate. Okay. Again, if it's all confusing, give me a call, 780-680-1334, and we'll sort it out. So that's the first one I'd like to wrap up with today, and that's your home buyer's plan. The second one, which is where you can withdraw from your RSP without tax, is a lifelong learning plan. So this is one in which they allow you, so let's say somewhere in life, you decide as an adult to go back to school or to take a course or a program, something that's academic. All right. It doesn't have to be a long program. Sometimes it's as short as 3 months, but it costs money and you don't want to go for a student loan or it's not qualified for a student loan, whatever. But there's different circumstances under which they say, okay, so why don't I use money in my RRSP? So that's called lifelong learning plan. And for that one, you can withdraw up to $20,000 to for yourself or your spouse. Yourself or your spouse. You can't use this one for your children. or grandchildren. It's just for you or your spouse to go back to school or take a course, some academic program. It has to be a qualified academic program. So if you go to a CRA, Lifelong Learning Plan, there's a whole list there of qualified academic programs that you can take. So you can withdraw up to $10,000 per year, up to $20,000 over the period of 4 years. So let's say you're taking a 4-year program, then you could withdraw $5,000 per year for the 4 years. Okay. Now with the lifelong learning program, you are able to recycle it in the sense that you can take a course, take money from your RRSP, pay it back, then take another program, pay it back, then take another program, pay it back. As long as you keep paying it back and the balance is zero, balance owing to yourself, owing to your RRSP is zero, you can do the lifelong learning literally for life. So it is a really nice program for those of us who like to study. Okay, so the last one I'd like to talk about today is RRSP loan. Okay, so the way RRSP loans work is this. So let's say now it's February, almost the end of the RRSP season, and you figure that, oh, my tax owing is going to be high. So what if I can drop my taxable income by, say, $10,000, then I might get a refund, right? So if you see ahead of time that your tax is going to be high, if you don't do a quick RRSP, then you can actually, come to me, we'll arrange for you an RRSP loan from a financial organization. So they will give you an RRSP loan. You apply that to the RRSP because it counts as a contribution. You apply that to your taxes, it drops your tax. You may or may not get a refund, but it drops your taxable income. And so with the money you save, you can actually start paying it back, or I recommend you just use it to start paying it back, because you can take a loan up to 3 years, sometimes 5, but the shorter the repayment time, the better. So by doing so, though, what you've done is you've borrowed money from the bank or insurance company to apply to your RRSP as a contribution, and then you drop your taxable income, maybe get a refund, and then start paying it back. Okay, so that's 3 ways. So I've covered in this wrap up 3 items. Again, if you need help with any of it, give me a call. Your home buyer's plan, where you can take up to $60,000 from your RSP. If you or your spouse want to do that and you each take up to, let's say you each take $60K, you can from that take money from your RSP up to $120,000. Now, what happened is that the government now, they also have a home buyer's plan, home buyer's support, which is in the form of your first home savings account. Okay, but because this whole series is around RRSP, that's why I didn't mention that upfront. But you can, for your home buyer's plan, you can take money from your RRSP and money from your first home savings account and add them together for your down payment. So there's a lot of leeway. The government is really trying to help us buy homes, and that's a really, really good thing. Owning your own place is part of the foundations of building wealth. Okay. So anyway, I hope that has been helpful. Just a quick wrap up for that topic before we move on to something else. So thank you so very much. If this has been helpful, please share, like, and subscribe, and we'll see you some other time. God bless you. Have a good rest of the year.